Hello everyone, welcome back to Upside Down Data. Today I want to talk about a new risk indicator we just launched for Kusama and its native token KSM. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So if you're returning to the channel, you're probably familiar with these types of graphs. What I'm showing you is the price of Kusama over time with the price in logarithmic form. Each dot is a day, and each day corresponds to the output of our risk indicator, the upside downside potential indicator, or UDPI. Score of 5 is high risk. That's when the upside potential is quite low, downside potential is quite high. Score of -5 is when the downside potential is quite low and the upside potential is quite high. And as you can see, throughout KSM's history, the UDPI has done a pretty good job of identifying these lower risk zones, these below 0 points, where historically it was advantageous to be acquiring KSM, as well as these high risk zones, these points where the upside potential seem to be getting kind of tapped out, and then tends to lead to either sideways actions or into these kind of corrections before KSM is ready to make another leg up further on into the market. Now, one thing that I think is a little bit remarkable about KSM's price history when you look at it is it's overall up with just some volatility around the up, right? You know, coming out from where it started back in 2019 and kind of exploding all the way through into the spring of 2021. You know, there was some volatility, but my goodness, look how much up there was in KSM. It was a little bit nuts. You know, this move to this move here was somewhere in the ballpark of a 50 to a 60x move. This move from here to here is about 20 to 21x move. You know, you can do the math. You know, starting out at around $1, getting up to around $500-600 up in these levels here. You know, one would be quite happy to have been an early investor in KSM. And what I think is useful about the UDPI is it does indicate these low risk zones. And something that's interesting to watch, you know, when it's rising up here, you'll see that the UDPI is never getting into those really dark green zones. And really the way that I interpret that, I think what's going on here is that KSM was just moving up so quickly that it was just kind of constantly realizing that upside potential, and so the model is kind of keeping you to update and say, okay, well, there's more upside potential to be realized. KSM keeps realizing it, and it keeps kind of updating until it gets to these higher risk zones where it identifies that being as maybe a little bit too high risk. Some cool off needs to happen before we get back down here to these points where the downside potential now was smaller, upside potential quite a bit larger, and then sure enough, KSM just started realizing that and going on these big runs. And so I think that's something that's important to mention about the UDPI indicator is even if you're at kind of these middle zones, you know, kind of 0 to 1-ish, something like that, that doesn't mean that price has to stop. In fact, oftentimes, you know, when you're in that kind of risk zone, oftentimes price will keep running to the upside. Price will keep moving up. So being up in this level doesn't necessarily mean that downside potential that is increasing is going to be realized. You know, oftentimes it takes before you get up to these higher risk zones before a reversal really tends to happen. So for example, where we stand right now, we're kind of getting back to these kind of levels, but that's not to be taken necessarily as a bearish signal or to suggest that a reversal is imminent. All it means really is that KSM has been realizing some of that upside potential that it has in it, and that's a good thing. That's what we want to see. And then it's only once it starts getting up to these higher levels of risk, like it did in the spring or back here, where you'd have to be more concerned about a reversal being likely. It's really when it starts tapping out the upside potential and you get up here that those reversals become a little bit more likely. And so I think that's just an interesting behavior that KSM kind of had in the beginning, where it's just kind of constantly realizing that upside potential until it got a bit too hot, and then constantly realize it until it's a bit too hot. And we'll see if that trend kind of happens here again, where maybe it'll just kind of hang out in these risk levels for a while until it finally blows up into these high level zones where another pullback might be kind of necessary. Another thing that we talk about a lot on this channel, but I'll mention again here for KSM, is that the summer just tends to be a point that the UDPI seems to nail pretty much for every asset that we've looked at as a low risk zone. And if you were in the crypto market back then, you'll remember that it didn't feel like a low risk zone. You know, everyone was super bearish. You know, everyone on crypto Twitter was calling for the market to keep crashing even more. You know, for Bitcoin to fall to 10K and for all these other assets, including KSM, to nosedive along with it. But really, the UDPI wasn't concerned at all. It was saying that this is actually a historically great time to be buying KSM. You know, the point at which its downside potential was tiny, upside potential was huge. You know, it was super bullish on KSM here. And so that's just one thing that's useful with this indicator, is it lets you kind of cut through that noise, cut through that nonsense, and really just see what is the data telling you. And here it was telling you to be, telling us that we should have been really bullish on KSM instead of really bearish like a lot of people were. So another way that we can look at this output is just to look at the raw output of the model across time. So that's what I'm showing you here. This is just the UDPI output, -5 to 5, and then the risk level across those different times. And so as you can see in that early part where KSM was kind of just largely going up at this point here, what was really happening was that it was kind of just hanging at zero. So the model was saying, there was some downside potential it could realize, but a bunch of upside potential it could realize also. And then what KSM ended up doing is just kind of consistently realizing that upside potential. So it'd be realizing it, the model would kind of update. Then here's a point where upside potential is greater than downside. And then finally kind of went to this bit where it overheated a little bit, had a bit of a correction, and then went on that massive tear into the spring. And then the summer here was this point where, really, given everything that the model knew about KSM, it just identified that this was just not likely to continue. That there was the downside potential was really getting tapped out here. There was just so much upside potential just getting stored up here that it was really suggesting that a reversal was likely. And indeed, that's what we saw. Kind of exploded out of the summer into that move into the spring. The parachain auctions with Kusama were kind of this big bullish news that kind of launched it up, really made its price spike. Had a bit of a cool down from them, but now we're kind of off to the races again with Kusama, with price appreciating along with a lot of the rest of the crypto markets. So another thing that's useful to look at this indicator, I've mentioned this before, I'll mention it again, is this behavior that when the UDPI kind of does these reversals that you'll see here. So here it did it in the spring, here it did it in the summer. That tends to coincide or follow in a general area around reversal points. So if the price has been falling, oftentimes when you see these kind of reversals, it'll mean that either the bottom is in or the bottom is close, that it's probably not too far away before the price action will reverse as well. So we saw that here again just recently actually, and then also back in the spring, where this signified kind of the end of that big impulse and just the start of kind of sideways action from there. There wasn't really a whole lot of big moves to the upside that KSM was able to put in after kind of this point here. So that's something to watch out for. It's something that's useful. It's not only just the raw number the UDPI gives you useful to see what the risk level is, but also what has the indicator been doing. And when you get these reversal points, that sometimes gives you an indication that there's a change in price action that might be coming along. It's been falling, reverses to the upside, that suggests that a increase in the price action, a reversal to the upside might be incoming, whereas a reversal this way suggests that a reversal to the downside might be incoming. So talk a little bit more about where the UDPI for KSM is currently. It sits at 0.26 right now. So what that means is it's a roughly equal risk to reward ratio right now. So it's not these crazy historically great times to be acquiring KSM necessarily, but it's also not a horrible time either. It's not up in these super high risk zones. It's kind of in the middle. So not financial advice. Do your own research, form your own opinions. But right now what the UDPI is suggesting is the risk reward ratio is relatively even for KSM. Now, another thing we mentioned a lot on this channel, and I'll just mention again here, is that it's useful to have a UDPI for an individual asset like KSM. You just figure out how risky that is right now, if it's likely to continue a run, or if it might need some time to consolidate, or if a correction might be incoming. But something that's also helpful is to have indicators across the crypto space, but for a bunch of different crypto assets. And that's what we're building here at Upside Down Data. That's really what we're kind of building out. That over the past few weeks, we've been adding more and more indicators for more and more assets every single week. So you'll see here we're up to 15. We have plans to just keep on moving, keep on adding more in the coming weeks. So stay tuned if you're interested to see those as they launch. And what you see is that this gives you a really great way of just quickly being able to identify which assets might be a little bit overheated. So actually DOT is one that does seem to be kind of overheated right now. So, its parachains are ongoing right now. That was kind of this big bullish tailwind that kind of pushes price up. It's now kind of at these higher risk zones, whereas KSM, that already happened to it back in September or October, when its parachains kind of had pushed its price action up. It had gone up to these higher risk levels. It had cooled off. It's possible DOT's just doing the same thing, just kind of delayed a little bit. So it could be that after the parachain auctions, maybe DOT needs to consolidate or realize some of that downside potential before it can move back to the upside. Not guaranteed. Obviously, DOT could just keep on running. DOT could just keep on realizing the rest of this upside potential. It doesn't have to stop here. But that's just one thing to think about, is that it is getting a bit overheated. So not financial advice, from your own opinions and strategies, something to think about. And something you can do is that for an asset like DOT that's a little bit overheated potentially, if what you could do is you could take profits off of an asset like that and then move those profits into a lower risk asset like KSM, for example, or even something like ADA or Algo, which are sitting at, or XRP, which is at -1. And then the idea is that if those assets are soon going to start realizing their upside potential, you can take whatever profits you made in DOT, put them into those lower risk assets, ride their moves up, and then compound your profits. So, for example, if you got a 5x profit on DOT riding it out of the summer, then maybe what you could do is then put into another asset like Atom or Algo, and then ride those multiple profits that maybe those assets are going to put in the future to compound that profit. So again, this isn't financial advice, form your own strategies, but that's just one thing that's useful about having multiple indicators like this, is that you can use them to say, if I want to take profits from one thing moving to the other, what might be a reasonable way of doing that? So again, make your own decisions, just something we like to think about here at Upside Down Data. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with UDPI, we're all going to make it.